Revaluation of assets and liabilities. On retirement too, assets and liabilities need to be revalued, come at their right value, and any increase in the value of assets or decrease in the liabilities, the benefit of it should go to the retiring partner. Similarly, if there is a decrease in the value of the assets or increase in liabilities, the retiring partner should be made to bear such loss. So the accounting entries would be exactly the same as that we did in case of admission. If value of assets increase, assets are debited and credit is given to the revaluation account or profit and loss adjustment account. This is one method of preparing the revaluation or profit and loss adjustment account. If value of asset comes down, credit asset, debit, revaluation. In case of liability, increase of liabilities, debit revaluation, credit liabilities. In case of decrease of liability, debit liability, credit revaluation. Same thing as we discussed in case of admission. Whatever profit or loss is given is transferred to the all partners in the old ratio. All partners in the old ratio. Alternatively, there could be another method by which we prepare a memorandum revaluation account, where in the first section, first half, we pass entries just like we do in case of revaluation. Increase in assets are debited. Correspondingly, revaluation account is credited. Decrease in asset would be credited and revaluation account debited. After preparing the memorandum revaluation account in the first section, we would take it in the old ratio, and in the second section it would be taken in the new ratio to the remaining partners' capital accounts. So if there is a profit in the first section, it would be credited to all partners in the profit sharing ratio, and in the second section, when there would be a loss because we reverse the entries of the first section, and this loss would be given to only the remaining partners in their new profit sharing ratio. And thirdly, we may do so only through capital accounts, in which case, if a profit is made on revaluation, the share of such profit is credited to the retiring partner's capital account, and the remaining partners' capital accounts debited in the gaining ratio without revaluation account. In case of profit on revaluation, retiring partner's capital account is credited. Retiring partner credited with what? Share of profit. And the remaining partners' capital accounts are debited in gaining ratio. Remaining partners' accounts are debited in gaining ratio. Accounting entries, as had been discussed before: increase in value of asset account debit to revaluation. Decrease in the value of assets means revaluation account debit to asset. Increase in the value of liabilities, increase in liabilities is a credit, therefore revaluation account debit to liabilities. But if liabilities were to come down, that's a profit, so we'll debit liabilities account debit to revaluation account. If there is a profit on revaluation account to all partners in old profit sharing ratio. Next, A, B and C share profits and losses equally. A retires and B and C continue to share profits and losses in the ratio 3:2. The following revaluation is ascertained and pass required journal entries. Land and building appreciated by 5 lakh. Provision for doubtful debts to be created 10,000. Liability of 10,000 for outstanding wages is to be created. What would be the entries? Land and building increase. So land and building debit 5 lakh to revaluation account. That's one. Next, provision for doubtful debts to be created and this liability also to be created. Therefore, revaluation account debit 2. Since liability is a credit balance, increase in liability we credit. 2. Provision for doubtful debts amounting to 10,000 and 2. Outstanding wages also 10,000. Revaluation account debit 20,000. Therefore, what do we get? We get a profit of 4,80,000. This profit revaluation account is closed by transfer to A, B and C. Amount 4,80,000. Therefore, 1,60,000, 1,60,000 and 1,60,000. This is how we would prepare a revaluation account. Land account, land and building to revaluation, revaluation to provision for doubtful debts and outstanding wages, and revaluation account debit to A, to B, to C's capital account.